Man, look at the shares of DJT. They just continue to rip. Now, the street obviously becoming more convinced Donald Trump will win next week's presidential election. Here's the thing, though. 38% of the folks just recently polled by Bloomberg in their Pulse survey say the market will actually accelerate. This rally will pick up speed under Trump win. Only 13% feel the same about a Harris victory. Now, for many, just having the election in the books would be great, as the S&P 500 does tend to rally after elections are over. So let's bring in CFRA Research, their chief investment strategist, Sam Stovall. And Sam, you've seen it in an election or two, my friend. Does this one feel different to you in some ways?
Yes, it does, because we're up more than 5% since July 31st. And whenever the market has been higher in that 3-month period, July 31 through October 31, the incumbent person or party has been reelected 82% of the time. One of those times in which it was not successful was 1968. And I have to say that this election sort of reminds me of 68, when LBJ stepped aside, Hubert Humphrey stepped in. The public was not happy with an unpopular war in Vietnam, the way today questions are raised about inflation and immigration. We had a Chicago convention. We also had the Fed cut interest rates before the election, but it didn't seem to matter. The replacement ended up winning rather than the incumbent.
The unhappiness that mirrors 68 now. At least we got great music out of that 68 slump. It's like, how do you account for that? I mean, I think Wall Street has a blind spot when it comes to most of the Main Street. And a lot of that, I think, is because we use a lot of aggregated data. And rich folks have done extraordinarily well recently, haven't they?
Well, certainly the market has done very well because we've been seeing a driver by technology. The typical sell-in May period, in which the market has gained an average of only 2%, we were up more than 16% in this most recent May through October period. So that's caused some investors to worry that, well, maybe the coming 6-month period won't be as strong as it normally is, up 7%. But history actually disagrees. It says that whenever we've had a strong May through October period, it serves as a running start to the best 6 months of the year, a term popularized by the Stock Traders Almanac.
Yeah, I think I used a chart on that recently. The 6 months ending in October, up more than 10% every single time the market has rallied. There's never been a time it hasn't. But you've been bullish for a long time. The bandwagon's filling up, and now people are talking about a melt up. Does that concern you at all? Is there any sort of contrarianness inside of you that says, too many people are too excited?
Well, yeah, if it's sort of like the old Colombian coffee commercial where Colombian coffee being served on the starboard deck of the steamliner and the boat then lists dramatically to the right-hand side. So, yeah, if too many people are on one side, then too much money has already been put to work. Who's left to either support or drive prices higher? So I would tend to say, remember that we are now in the beginning of a third year of a bull market. Traditionally, third years have only advanced by 2%. And a majority of these stock periods have either seen bear markets, declines, or sub-average returns.
We got less than a minute to go, Sam. I'm looking at your names here. You've got industrial names. You've got you've got industrial names, material names, and even your technology name. Corning isn't one of these necessarily household names. It used to be a household name. Are these all sort of value-based ideas right now?
Well, Charles, because of the article that I wrote just recently called "'Tis the Season," in which the best 6 months are ahead of us, historically, the sectors of technology, consumer discretionary, industrials, and materials are the ones that most frequently outperform the S&P 500 from November through April. So I selected names from each of these sectors: O'Reilly Automotive from the consumer discretionary, Leidos Holdings from the industrials, Packaging Corp of America from materials, and Corning from tech. They all not only have buy recommendations by CFRA equity analysts, but also have very strong power ratings by our Lowry Research Group, was a technical analysis arm.
Hey, Sam, you're one of the best, man. We're lucky to have you. 1 week from the election, I know everyone's excited. We're going to need to grab you again real soon. Thanks so much.